All right. Good morning, everybody. Happy CPI day. Today is Tuesday, March 14th. CPI ended up coming in slightly hotter than expectations on the month-over-month reading if we go to the economic calendar. But everything else matched expectations. So currently markets are going up. SPY was at 390 last I checked, but the core CPI was 0.5% month over month versus 0.4% expected. So that was the higher reading. The regular year-over-year reading came in at 5.5 versus 5.5 expected. Month over month was 0.4 versus 0.4, and then the CPI year-over-year was 6% versus 6% expected. So of all this, it seems like the core seems to be a little bit sticky. So excluding energy, and I think it excludes food prices because they're so volatile. Seems like core inflation is still kind of sticking around. So, interesting to see that dynamic. Tomorrow, we also have the PPI, or the Producer Price Index, coming out. So, another inflation report. Usually, this precedes the next CPI because whatever the producers pay usually gets passed down to the consumers. So, if they're paying more, that higher price gets passed down to the consumer. But right now, SPY is up by 1.3%. The Dow is up 0.8%. And let's see. The NASDAQ is currently up 1.6%. So the NASDAQ is leading the way at the moment. Gold is pulling back with the dollar going up slightly this morning at 103.81 for the dollar index. So whenever dollar goes up, gold goes down, and then the inverse, whenever the dollar goes down, gold goes up. So that's why you saw the rally for gold the last couple of days, and especially with the bank run fears that we've been having, people are looking for a safe place to put their money. So gold is that safe alternative. Looks like the 10-year is currently up 3.3%, currently at 3.6. From 3.49 at the lows yesterday. And let's see what the 2-year treasury yield is at this morning. Currently up 5.6% to 4.25. I think yesterday this was at like 4.0 almost. So nice little 25 basis point jump that we're seeing for the 2-year yield. Definitely up a ton since this inflation report. So yields are rising right now, and you're seeing the stock market going up with that. So that's more of that recession kind of vibe, where whenever yields are going up, usually the stock market will go with that. And then when the yields and the dollar are coming down, that's when you'll see stocks coming down. So today, if that is a sentiment of more, of these bank run fears, then I would imagine that SPY would probably hold up. Right now it's at 1.2%, so I think that could be a little bit too much, but considering, the volatility that we've experienced the last few days, it's not too shocking. And the VIX is currently at, 23.86 right now. So this one is below 25, so I would probably be in credit spreads. And I do still have the Iron Condor that's expiring for tomorrow. Good morning, everybody. So we'll head on over. One more thing that I wanted to check actually was the 210 yield, or 210 spread. Currently negative 0.48. This was negative 1.03. So this has been cut in half over the last few days since the bank run fears that we've been having for the market. Let's see. 210 spread. That one's not up to date, but the CNBC one is. And this actually dropped a little bit, so that's actually good. You want to see this pulling back rather than rocketing up like we saw the last few days. So that could start to quell the recession fears if we start to have that pullback. Usually whenever this inverse is negative and then goes positive, that's when you start the recession. So It's good to see that this is actually pulling back. That means that the recession is at least delayed. But yeah, 10 years up a lot. IWM is making a recovery. That one should make a decent recovery too. Considering that it fell like 3% 2 days in a row, I think that one could stage a decent recovery. Maybe to 180 would be a decent trade to take on. Let's see, SPY is currently at 390.7, and then the Q is currently at 295. So that call credit spread I got for the Qs is probably at max loss right now. Luckily, I didn't put too much into that one. Currently down by 170, and I put, I think, 250 into it. So another 15 times 4, $60 that I could save myself if I exit now. Let's check out the short time frames, the 5 minutes. Yeah, looks like SPY is overbought right now at 73. QQQ probably the same, actually a little bit more overbought than SPY is at 80 RSI. So definitely bullish. As long as it's above 50, that's bullish. So keep watching that. And that one looks like it's definitely primed for a breakout right now in that 2-day range. So let's see if I can save myself a good $45, $60 somewhere around there or not. 4 of these. The bid ask on it is extreme. 71 and 104. For today's expiration at 290, that's kind of shocking. How wide that spread is. I'll try to do it for 88. If not that, then we'll try 90. Gotta love two-factor authentication. All right. We'll see if that works out. Nope. Doesn't look like it. All right, let's try 90. If it doesn't fill there, then might just leave it alone for a while, see if we do get a pullback later on today. Yep, we got filled. Okay. Got filled at 90 for those. I ended up opening them. Let's see, for 172 over 4. So that one, 43.90. I'll post this here and then do the math. Closing options alerts. Just cut losses on the 290, 291, QQQ call credit spread. Expiring today, the 14th, at 90 each. 290. There we go. Originally opened 4 at 43. So 360 minus that 172 was a 188 loss. And then I still got the iron condors that are expiring tomorrow for SPY. Still think that trade might work out, but we are testing that 391 strike price for the call side. So that a little bit concerning, but we might be able to hold on to it for the meantime. What's really surprising is that Bitcoin is up another 6-7% to 26,000. So this one's approaching 30, it seems like, pretty damn quickly. Gold isn't seeing as much of the love. Interesting enough, GLD currently at positive 0.5%. So not really much change from yesterday, but still trading, I guess, in the higher end of the range of yesterday, of above that 176.70 or 177 level or so. So hopefully we can hold up there. Still got my gold leaps. That one is still up by 125, so still positive on it. I'm thinking about actually selling out of this gold leaps before the next Fed meeting, and I think everybody's been talking about the odds for 50 basis points, 20 basis points, and how the odds of going higher for interest rates by the end of this year have basically dropped from a week ago. If we look at the December, so end of year, and if we look at this little chart down here, a week ago we were estimating that interest rates would go as high as 5.5 to 5.75, and now the markets are saying that it's going to be 4.25 to 4.5. But I don't think that the Fed is going to pivot, even with the regional bank crisis that we've been having recently with the Silicon Valley Bank and all the other small regional banks that have been going kaputs. I don't think that the Fed is going to pivot on that. I don't think that they care enough about regional banks as much as they do about inflation. I think inflation is much bigger of an issue. So, at the March meeting, not only are they going to choose between 25 and 50 basis points, I think they're probably going to go with 25 basis points, but they're also going to give the summary of economic projections to where they estimate where interest rates are going to be by the end of the year. And I think it's going to come in much higher than where the Fed futures are expecting. So I think that March 22nd, the Fed meeting, is going to be a pretty bloody sell-off, considering that the markets have heavily discounted where the rates are going to go by the end of the year. But, I could be totally wrong. Maybe the Fed does end up pivoting, but I don't think that regional banks is as much of an issue for the Fed as the Fed futures are making it out to be. Good morning, everybody. VIX is dropping. You are sure right about that. Currently at 23.28 for the regular VIX. So that does mean that put options are getting pretty cheap if you're going out with your expiration date. So I think I might end up opening another put option for after the Fed meeting, maybe a few days after the Fed meeting, because I think that's going to be a pretty tough sell-off. And especially with the VIX coming back down to 23, that does make them cheaper. VIX is down by 12% today. UVIXY is probably down a shit ton more. Let's see. It's actually only down 11% to 562. So either we could buy more of the VIX, or we could buy some puts for SPY. Both are a decent idea, I think. The interest rates are definitely on the rise this morning. The 10 years back up to 3.66, almost 3.7 already. So that ought to weigh down on QQQ, but like I was talking about earlier, if the narrative is these bank runs, recession fears, then stocks will actually go up with interest rates instead of down like they were before whenever the fear was inflation. So, let's see. If we expect the dollar to go up, probably want to get out of the gold leaves, but I think I'm going to save that for later. Let's check out. All right, so I'm going to try to find some puts that are cheap with a few weeks until expiration. So today's the 14th, so if we want like 3 weeks out, that's 21 days. Let's see. SPY. Right now we're trading at 391.35. And if we go 3 weeks out, that would be, let's see. I think on Robinhood it tells us how many days till expiration each option is, hopefully. Which would put us with the April 6th expiration. I think we only need the 31st. So we'll see what the difference in price is there for the 31st or the 6th. All right. I think 385 would be an easy level to go short at. Assuming SPY is going to go back below 385, I think would be pretty easy. So, let's see. That's going for 35 with the 31st expiration. And then if we go 1 week later with the 6th, assuming SPY is going to be below 385, we're paying $38. It's like $3 more, but does skew your risk reward there. I think I'd rather go with the 31st. And maybe we could even go higher with the strike price at 386 instead of 385. No. I'm not sure that's worth it. All right. So I'm looking at the 385, 386 put debit spread for March 31st. I've already got quite a bit of these put options with longer expiration dates, so I probably won't put as much. Let's see. Probably like another 200. So another 6 of these. And they are going up in value right now. Let's see, 35. I'm hoping to get them at. But the bid ask is kind of wide. There we go. All right, let me post that to the Discord. Just opened a new SPY put debit spread expiring 331. Assuming we're going to be below 385. And I got them at 35 each, which I think is a decent deal. Come on now. All right. So that one, basic reason behind it was the Fed meeting, and I think that the summary of economic projections, they're going to give the markets higher interest rates than what they expect, so it's going to be pretty bearish from there, in my opinion. SPY is, well, that's QQQ is actually pulling back from 296, currently at 295.18. And SPY is trading at 390 and some change. Let's read the headlines, see what we have. NASDAQ, S&P futures, stretch gains after the February CPI. Redbook was 2.6% versus 3% expected. Stocks volatile as CPI meets expectations. Attention shifts now to the Fed's move next week. I think that's definitely going to be the important piece that we're watching for. Especially that summary of economic projections is going to be huge. It always is, too. The last two times that we had the summary of economic projections, the S&P 500 fell by 3% both times, both in September of last year and then in December of last year. SPY fell by 3% on both of those releases. So definitely play it safe. It's going to be very volatile either way. Tesla is currently up by 3% to 180. Still not at the 200 mark, but it is recovering. McDonald's has been unfazed by all of this, it seems like, in the past couple weeks. Not really moving much at all for the entire month. Only down 0.26%. 3 months chart pretty flat, and then the 1 year still positive. So McDonald's, that staple. Everybody's going to still go to McDonald's even if we have a recession. All right, let's check my FedEx trade too. So FedEx is trading at 200.1. I'm assuming it's going to stay above 197.5. So this trade is currently up a whopping $8. This one I'm trading for earnings, which is coming out, I want to say today or tomorrow after hours, but I'm not sure. No, it's Thursday after hours, actually. All right. VIX is making a little bit of a recovery to 2350, but still low. Still down 11%. Oil down. So oil is probably going to keep coming down with the recession fear. So that one, you could take a short position on it if you think that we're going to have a recession soon. I still think that it's like 6 months out at least. If not like 12 to 18 months. I still think that we have a while until the recession is actualized. Still think that there's a lot of money flowing throughout the economy. And you can look at that just based on, bond prices and how volatile those have been the last few weeks. With the flood into bonds the last couple of days with the bank run news. So you saw TLT 20-year Treasury ETF going all the way to 110, and now it's pulling back to 104. So a $6 drop in 24 hours. That's pretty crazy. Yeah, bond markets are insane right now. I would not want to be a bond investor, to say the least. Pretty wild market. Let's see. Let's see what we got going on the Discord. Dollar is rising with the markets. Yeah, so that's the recession fears. Whenever the dollar goes up, markets go up. And then if the fear is inflation, then it's the opposite. Whenever the dollar goes down, the markets go up. Whenever the dollar goes up, markets go down in inflation fears. Hopefully I just answered your question, Danny. Stay hydrated, absolutely. What software am I using? This is Thinkorswim. These charts here. It's what I've been using for like 6 years at this point, so it's just what I stick with. A lot of people prefer to use what's called TradingView. I would rather not pay $30 a month when I can get the same thing from Thinkorswim. IWM is up 2.5%, so this one's actually pulling back from 3% positive. This could end up leading the markets down. Let's check what I would imagine KRE would be doing okay with the 20% drop that they've seen since last Thursday. They're actually up by 7% this morning, so that's good to see a little bit of a recovery for the regional banks, but still down a shitload, from 59 all the way down to 47. Still seems to be a lot of selling pressure here. And then if you look at the rest of the banking, XLF, this one is up 2%, 2.3%. Let's check the big banks. Bank of America is still trading at 29, so it's still below that 30 mark. JP Morgan is up 1.5 at 133. Let's check Wells Fargo. Currently at 40.4. So all these are still down from the last few days. What would I say for the Thinkorswim mobile app for regular trading? I'm not a fan of actually trading with Thinkorswim personally. I prefer Robinhood just because of the simplicity. Thinkorswim, you have to go in and adjust all the settings in order to make them to your liking, like setting the default of how many contracts you want to open. So personally, I would rather just stick with Robinhood or trying to move my money over to Aries right now. So that's my second broker of choice, Aries. It's a newer one. And it's pretty similar to Robinhood. Yeah, the desktop is pretty too adjustable for my liking to trade. It's just redundant. Yeah, no problem. Save water, drink beer. At 9 in the morning. CPI already came out this morning at 8:30. So the CPI came in at expectations besides the month-over-month core rating. 0.5% versus 0.4% expected. And then regular month-over-month was 0.4 versus 0.4. Year-over-year reading was 6% versus 6%. And then the core CPI year-over-year was 5.5 versus 5.5. So everything came in at expectations besides the core CPI month-over-month reading. So the core inflation is still kind of sticky. We also have Cleveland CPI. I don't think that the markets are going to pay too much attention to regional CPI reports, but then we also have Fed Bowman speaking in at 4:20 today. Actually, 5:20 today. And they might give us some insight as to where the Fed is going to go over the next year with the interest rates. That would be pretty interesting. Because I don't think we've had any Fed members coming out and speak since the SVB, the Silicon Valley Bank crisis, besides the bailout for depositors. That's all we've had. But no press releases from any of the Fed members. So that Fed Bowman one should be interesting. Let's see what they're scheduled to speak about. Fed speech calendar. Today is the 14th, so if we check on here, the innovation imperative modernizing the U.S. banking system. So that's pretty timely, I would say. Probably going to talk about CBDC, I would guess. So they might actually have some comments for what's been happening in the last few days. This one's in Honolulu, Hawaii. Sounds fun. But yeah, no other Fed members speaking for until the next Fed meeting on the 22nd, where they make the interest rate decision and then give the new dot plot. And the dot plot has more weight to it, I think, than the 25 or 50 basis points. Yeah. I really like Aries, but I'm currently not allowed to trade with them because I don't have enough money. I think I need $2,000 deposited into it to start trading with them. All right, the 10-year still going up. Damn, almost 5% today. 3.67 to 8, so almost at that 3.7 mark that we had on Thursday of last week. So if we recover that, I think that could be pretty telling for where interest rates are going to be going over the next year. Let's go back to SPY is currently trading at 391 still, so still holding up, not really pulling back by much. The VIX is still up too with that at 2366. Interesting. I wonder if we'll get a double top here and pull back, or if we'll continue this rally. If you're looking at RSI, I would think that it's probably going to continue the rally, but if we do end up peaking here, that could be a sell-off coming, maybe down to that 389.75 mark. Let me check in on those call credit spreads I have for tomorrow, the Iron Condor. I could probably take profits on the put credit spreads. Yeah, they're down to 5 cents each. I'm not really sure if there's any sense in closing out of the put credit spreads if it's trading at 391 right now, unless we're trading at like 394 by the end of the day, or 384, sorry, by the end of the day. I think I'm just going to keep holding these, and then I'll keep holding the call credit spreads. Waiting on a pullback tomorrow. Checking in on this gold leap, still up by 130. Tempting to take profits, but not going to do it yet. Maybe if the interest rates for the future start to move, then I'll exit out. But with that discount going from 5.75 to 4.5 on the year-end interest rate for the Fed, I think that interest rates have a lot higher to go after the Fed meeting versus before. Do I think SPY would be able to push more? I think it will. It really depends on if we double top here or if we hold 50 RSI. If we hold above 50 RSI, yeah, I think that it's probably just going to keep pushing up for the day. It is up 1.5% already, so it has seen a decent rise already this morning, which does, discount how much it could go up. But with volatility rising the last few days, it wouldn't be too shocking to see this up like 2%, 2.2% by the end of the day. Have I tried Thinkorswim Web? I think I've tried Thinkorswim Web. I just wasn't a huge fan of that, just because I've been used to the desktop platform. Let's see, where am I? There we go. Chance of a rate pause or 25 basis points. Let's see. Check the FOMC watch tool. I think it was like 80% towards 25 basis points and then 20% for a pause. Yeah, and it's basically the same. So 83% chance that we get a 25 basis point rate hike and then a 16% chance that we get a pause. I think that there's 0% chance that we get a pause. And I don't know if Fed Chair Powell wants to walk back his 50 basis points. So I think that could possibly be on the table, but they do usually follow what the Fed futures tell them. So the Fed futures are telling them 25 basis points for this one, then they're going to go with that 25 basis points, even when they probably should do 50 to cool off inflation. So we're probably going to get this 25 basis points. But then the summary of economic projections is going to be the key to where interest rates are going by the end of the year. And I think it could be pretty shocking for the later readings, like in July and then in December of this year. Yeah. 4.5% is way lower than where the Fed expects it. All the Fed members over the last month have been saying that they're going to go to 5.5%, so that's 100 basis points higher than where the futures expect by the end of the year. So that's going to be a pretty big shocker to the market, I think. Oh, for trading on the web app? No, I haven't tried the trading on the web app. The VIX is just staying at that 2350 mark, so not really changing much so far this morning. Kind of tempted to go long on some more UVIXY shares, but at the same time, I've already got like 400, so still have a lot to gain on it if the VIX goes up. And I think that there's a good chance that VIX goes up on the 22nd. So maybe we can wait a few more days to start piling into that position rather than getting in right now. Especially with UVIXY and how that loses value over time. It might be better to wait it out. The dollar and the yields might be pulling back right now. Yeah. So the dollar ended up topping almost at 104, and now it's pulling right on back. So this goes below like 103.50. We might see some more selling in stocks. We'll see. Right now it's trading right around 50 on the RSI, so not really bullish, not really bearish just yet. We'll have to wait on it to confirm, the hourly chart is still bearish, below 50 RSI. So that would tell you that it's going to keep going down. But intraday, the 5-minute chart, still undecided for today. And then the 10-year pulled from 3.7 down to 3.64 right now. TradingView has so many more indicators than Thinkorswim. Why not put importance on the indicators? I don't use a lot of indicators in general besides RSI. For the most part, I don't even use MACD on my chart, honestly. And then the 200 moving average is sometimes pretty helpful. But for the most part, like, I don't rely on indicators, so I don't feel like having TradingView is really worth it for me. I'm more of a fundamental based trader, just watching all of the economic data that's coming out and then judging where the markets are going to go from that. And you can even like add custom studies to Thinkorswim too if you know how to code it. I know somebody that does a lot of coding on Thinkorswim. Like, that's basically all he does is exclusively Thinkorswim coding, and he has so many different crazy studies on his charts that I don't understand. But yeah, I don't really rely on indicators too much myself, so. Let's see, IWM pulling back to 177 from 179. QQQ is stalling out right now at 296. Kind of tempted to do a call credit spread for QQQ. Assuming it'll be below 300 would be pretty easy. Let's see, for tomorrow's expiration, you'll get paid. The credit's only 20 cents for that, so I don't feel like that's worth it, especially if we stay bullish on the RSI. I wouldn't want to take that position. Yeah, the dollar's still pulling back right now. So that would probably weigh negatively on probably the banks mostly is where that's going to be felt. Let's check KRE again. 47.66. I think a call credit spread for KRE could be an okay opportunity too. If the dollar keeps pulling back, that would not be good for KRE, but I haven't traded this ETF before. I wonder if there's a lot of liquidity for it. It seems like there would be, especially right now with everybody watching the regional banks. Let's see, KRE, regional banks. That one we could set our expiration date for after the Fed meeting, and I think that would really work well. Let's see what strike price I would choose, though. That's the big question. If we go with the $50 strike price, we get paid only... Oh, the bid ask on it is extremely wide, so we got to go to Aries for the bid ask. The bid is 10 and the ask is 52. KRE. Regional Bank ETF. The options chain for the 24th. Assuming it's going to be below 50. Sell the 50 call. Buy the 51. The bid is 42 and 36. That's not a bad trade. Not a bad one at all. This might end up coming to 48, so we might be able to wait this one out a little bit longer. Probably get a higher credit for it, but yeah, I was saying 35 now. 0.35. Oh, the bid just dropped to 30 cents instead of 35, so I'm not going to be able to get it. That sucks. That sucks. Went down too quick. We could do a put for it too. Let's see. Back down to 45, I think would be possible. These are going for 26 now, so they're way too cheap. But if we switch over to the puts, look for a break even around maybe 46, 47. We're paying 700 for that. No thanks. I don't want to spend 700 on a put. What's the IV for this, I wonder? 93%. So you're paying a lot for implied volatility right now on KRE. It's better to be a seller than a buyer whenever implied volatility is that high. So I would rather take the call credit spreads, but I want to get that 35-cent credit instead of the 28-cent credit that I was paying before. Let's see, it's paying 33 now, so they went up. Nope. Couldn't get it for 33. Try one more to 32. That's the least I'm willing to take. And I'll leave the order in there at 32. If it doesn't get filled in, I won't take it. Yeah, it just dropped to 30 on the bid, so. Chart Prime? I haven't heard of that. Let's see. I'll look it up. Chart Prime. The only tool that you need to be successful in your trading. Chart Prime, TradingView, Premium Indicator. Intelligent tool for serious traders. Let's see. See all posts on our Discord. I'd have to check it out at a different time. It's nice that they have it on mobile, though. that can be pretty hard to come across whenever you're trying to look for indicators. Huh. So it does all the lines and stuff for you. There's other ones that I think you can get for free, so I don't think that you have to pay for it here. I did get filled on that KRE trade just now. Good stuff. Okay. New options alerts. Swing trade. Premium. Just opened a new KRE. Call credit spread expiring 3/24, so 2 days after the Fed meeting, and I got them at 33 each. Strike prices, I'm assuming it's going to be below 50. Let's check out KRE. Yeah, it is moving up a bit. So we probably could have waited till it hit like 48. Maybe 48.3 or 48.5. Got more credit out of it, but that's all right. VIX is still coming down at 23 right now. I would think that the put credit spreads I have for 390 will be okay to get out of. I would think that they would be max profit or close to right now. Put credit spreads. Oh, they're still going for 4 cents. That's crazy. Would today be considered a bounce off the mother of all trend lines? It could be. I know for ES, we got it yesterday right here. For SPY, yeah, we were trading around it this morning, so that could be a bounce on the mother of all trend lines. So we're looking for 386 for the end of the week. For either above or below it, I believe. If we look at I think if we go to the daily chart, it's 386 to the level to watch out for this week's expiration. I know that the market makers could push to 400 by the end of the week, considering that this is the March expiration, the monthly expiration. So we might still have some upside toward the end of the week based on the maximum pain.com options SPY, which I'll link here. Set the expiration date for the 17th. And the maximum pain is actually $3.99, so it moved down $1 from where it was before at $3.99. So if we do get a push towards the maximum pain, we might be $3.99 by the end of the week. It's still Tuesday, so we still have a lot of time for that. Don't have any gaps in the chart for right now. Not on the daily. I'm kind of tempted to take that trade too. Assuming we could go to that $3.99 for the maximum pain point. $3.95 would be the easy trade. Say for Thursday or Friday's expiration. See SPY. Assuming that we'll go above $3.95 by the 17th expiration. That's trading for 45 cents. Jesus Christ. That is expensive. That is expensive. If you go one strike price higher with 396, you're paying 40 cents. Even that. Too expensive for my taste. All right, looks like the treasuries are going back up 3.68 for the 10-year, so almost at the 3.7 level again. IWM recovering, QQQ making a new daily high. SPY going to 392, and the dollar index slightly recovering. Does PPI usually come in line with expectations? Probably. Let's see. And PPI is like a measure for CPI rather than the other way around. Because the producers have to produce the goods first and then they sell it to the consumers. So it's basically preceding next month's CPI. It's the way that I see it. But if you look at the PPI report, the expectations is 5.4% year over year versus 6% previous, and then month over month is 0.3% expected versus 0.7% last month. And then if we look at previous reports, let's go back to February. Not sure when it was reported, but we'll search for it. PPI came in at 0.5%, so slightly higher than expected. Expected last month. Year over year was higher than expected. And then this one was 0.7 versus 0.4. So seems like the last few ones have had a tendency to come in higher than expectations. So you might get a sell-off with the PPI tomorrow morning, coming out at 8:30. But I think that's all the trades that I'll make for today, and I will catch y'all tomorrow for the PPI report. Am I making any trade for tomorrow's PPI? Just the ones that I have on already, so I'll take a quick look through the positions. So SPY call credit spread for tomorrow's expiration date, assuming under 390. Put credit spread assuming above 380. So an iron condor basically assuming SPY between 380 and 390. The FedEx position for earnings on Thursday, so that's not really related. The KRE trade that I opened this morning for the Fed event, the SPY trade that I opened for the Fed event. Then I have an April put debit spread for SPY, and then a gold leaps, and that's all the positions that I've got so far. So that's all I got for y'all today, and I'll catch y'all tomorrow for PPI. See you, everybody.